What is a reasonable rent increase? Have you ever wondered what a reasonable rent increase looks like? Understanding this can make a big difference in real estate investing and property management. Let's break it down. Typically, a reasonable rent increase falls between 3% and 5% annually. This range helps landlords cover rising costs while ensuring tenants can still afford their homes. However, the exact percentage can vary based on several important factors. First, consider local market conditions. If rental demand is high and similar properties are charging more, landlords might justify increases at the higher end or even above that typical range. On the other hand, in areas with many available rentals, smaller increases are often better to keep tenants and avoid vacancies. Next, think about the condition and quality of the rental property. If a property is well maintained and has recent upgrades, it can support higher rent increases. Conversely, if the property needs repairs or lacks amenities, landlords may need to keep increases modest to stay competitive. Lease terms also play a role in how and when rent can be increased. For fixed-term leases, which are often 1 year, rent can usually only be raised at lease renewal. Month-to-month leases allow for more flexibility, often requiring 30 to 60 days notice before a rent increase. It's also essential to comply with local rent control laws, which may limit how much or how often rent can be raised. Landlords should also keep their operating expenses in mind. This includes mortgage payments, taxes, insurance, maintenance, and management costs. If these expenses rise, rent increases may be necessary to maintain profitability. However, it is vital to balance these increases with market conditions and tenant retention goals. From a practical standpoint, the goal is to set rent increases that cover increased costs and inflation without pricing tenants out. It is also important to reflect current market rents for similar properties. Maintaining good relationships with tenants can reduce turnover and vacancy costs, which is beneficial for landlords. Communicating clearly and respectfully with tenants about the reasons for rent increases can improve acceptance and help avoid disputes. In summary, a reasonable rent increase is generally around 3 to 5% annually. Adjustments should be based on market trends, property condition, lease terms, and operating costs. This approach helps real estate investors balance profitability with tenant satisfaction and successful property management.